Everyone, today, December 15, 2021, this is Professor MoneyPigTrading. Today we're going to talk about stock market standout rally is right here. And today we're seeing an awesome session in the stock market. SPY is up 1.85%, while QQQ is up 2.28%. And what's going on? Let's take a look. And because we take this chance, we're doing really great. That's my personal day trading account, up $13,000. And I focus on Apple and Nvidia day trading, which make 150 and 180% correspondingly. So very awesome. If you're interested in our paid Discord community, feel free to check out www.moneypigtrading.com. Also Twitter, YouTube, Instagram, MoneyPigTrading. Make sure to follow to get the latest contents. And we also provide a coupon code for our Discord community for the Christmas sales. So the coupon code will, at the end of this video, we'll put down below. You feel free to copy yours on our website. So what's going on today? Why the stock market rally so much? Why the Federal Reserve actually said they're going to raise the interest rate in 2022? Wouldn't that be a very bearish factor for the stock market? One of the reasons is the stock market has been down so much. I know the general indices like SPY, NASDAQ, QQQ has been holding up with a slight pullback to around 15 or 30-day EMA support, like you see on the left side, which is the daily chart of QQQ. However, a lot of growth stock has been slaughtered across different sectors, right? Like this very strong payment and e-commerce name SE has been down since the end of October, from the high 372 all the way to today's low 213. Right, it's down 40-50%. Across board, you are going to see ZIM down 45%. You're going to see DocuSign down about 60%, and Roku ROKU also have a strong revenue growth, and positive EBITDA is also down about 40% as well. So a lot of stock actually got hammered already, right? So not really a lot of room for a lot of these strong earnings, strong performance stock to go down further. That's one of the factors. The other thing, actually, Fed Chief Powell in the FOMC meeting and the speech today is not as hawkish as the market afraid of, right? So first thing is fully expected that they're going to speed up the tapering, which is actually good for a fight against the inflation. The inflation is really bad. Speeding out tapering right now is fully expected, and it actually has been, it will be a healthy thing for the market, like we have been mentioned in the previous videos. And also, economy growth is the foundation of the US stock market. And the economy growth has been very strong in Q4 and expected to continue to grow in Q1 and throughout the whole 2022 so far. So really nothing to worry about. Fundamentally, the stock market don't have any support compared to 2008, for example, the financial crisis. The economy really slowed down, right? Then you see the market crash. And also the possible 3 rate hikes in 2022 is also fully expected, and the market has priced in already. And there's no rate hike until tapering finish, which is very dovish, the market in their mind. So that's why the market really liked the reaction, and that's why the market rallies so much. And also one thing I really like Fed Chief Powell said is they will make sure the minority hiring in the job market pick up until they really try to reduce the injection to liquidity to the market. So all this together, the market really like what they hear, and that's why the rally continues. And just giving you 2 more slides of economy data is one of the key metrics we're tracking, and we share with our paid Discord community member. Looking at the chart and also our social media follower, the blue line is the S&P 500 price divided by 100, so it's $1 per share. The red line here is the earning per share for US public companies. You can see this red line and blue line really correlate with each other very well. In 2008, when the economy slowed down, like we mentioned, the EPS, the earning per share, did drop across the board for US public companies, and so does the S&P 500 price. However, right now, a lot of people are shouting out the market is going to crash when the Federal Reserve is going to raise the interest rate. We have been saying, no, that's not right, because the number we're seeing, you can see the US company's EPS, earning per share, is all-time high right now. That provides really solid support for the US stock market. And the other key metric we told our paid member last week is we are actually tracking another very important metric, is the percentage of the positive earning guidance in this 21 Q4 so far is better than last year 20 Q4. So that's telling us a lot of companies are going to do even better in their earnings in the next 2022 Q1 earning reports. that will provide more strong support for the US stock market, and we should continue to see the rally into the January and February earnings season. And because of the dovish, or not as hawkish as expected, Fed Powell and FOMC, we do see this interest rate hike next year will be more like a soft landing. It won't cause the market to crash right away, but maybe we'll see some pullback at some point. I don't know, maybe February or March after the awesome earnings season. But we should see some more rally in the stock market, and S&P 500 should continue to see the rally. Back to the topic, standard rally usually happens between a very reliable seasonality between December 14 to December 26. Let's take a look at small cap IWM. Between these two dates, on average, is up 2.47% in the past 9 out of the 10 years. Okay, the similarly SPY actually up 1.47%, and tech QQQ is up 1.18%. So very reliable seasonality, like we mentioned in the last video, because after the tax law sailed and watch rule prevention, a lot of investors now will start to buy back their stocks before the year end to get ready for the January rally. Usually January is a really good month for a bullish seasonality for the US stock market. So let's take a look at last year, right? S&P 500 daily chart on the left, QQQ tech on the right. You can see last year the standard rally was not that obvious since the stock market melted up since October last year all the way into the year end. But we still see some rally in SPY and QQQ. Because of that, last year the rally was started way early back to October, and so many stock pullback, like we mentioned in the third slide, in the past 1 month and a half. We do think this standard rally this year will be more obvious, prominent than last year. So yeah, if you want to take advantage of our Discord community with awesome performance, here's a 20% one-time off. Valid until December 31st, the end of this year, 11:59 p.m. Pacific time. The coupon code is kind of hard to read, but I'll make sure it's on our website and down below in the video description. So we have a really awesome performance in our swing trading. You can see the orange line is the average return per trade, while the blue line is winning rate. So even in a bad month like August, we still maintain a positive average return per trade with a winning rate pretty much almost above 50%, except August 2021, which was pretty rough. And we also have a solid long-term investment program, 74 trades this year so far, average return per trade 16.9%, with a winning rate around 76%. So again, if you're interested in our paid community on Discord, feel free to check out at www.moneypigtrading.com. Again, Twitter, YouTube, Instagram, all MoneyPig Trading. Make sure to follow and like this video. Thanks for watching. I will see you guys in the next video. Bye-bye.